Welcome to the East Lothian ladies, and just welcome to the first of our two webinars that Sandra and I are going to be running in January. And we are from Gilson Gray Financial Management team. So just to give you a bit of background as to what we're going to be covering today, in approximately about 30 minutes, we'd like to try and keep it to 30 minutes. Sandra and I are going to be discussing the financial power of women, how it's growing, but how often confidence and self-esteem can be stumbling blocks when it comes to finances. Financial advice and a long-term financial plan can help boost self-assurance when making decisions about savings, pensions and insurance. And so tonight we're going to be discussing how women can become more actively involved in family finances, giving you hopefully some helpful tips on putting a financial plan together, and also just discussing the foundations of all plans, financial protection. We will also be closing today's session with some questions that have been sent in from East Lothian ladies. And as we were just kind of trying to keep today's session to 30 minutes, if there were any other questions that you wanted to ask, please feel free to share them into the chat function. We'll get back to you at a later date with them and be able to answer your any specific questions that you will have. So I'm just going to go on to my second slide. Let me just, technology, please work for me. Oh, sorry. Myself, as I say, we're part of the team at Gilson Gray Financial Management. Firstly, I'd like to introduce myself. My name is Rebecca Baird. I've been working in the financial services industry for about 9 years now. The majority of that being spent in Sydney, Australia, where I was working primarily in life insurance services. I moved back to Edinburgh from where I'm from about 2 years ago, and was lucky enough to get an opportunity to join the team at Gilson Gray. I've really enjoyed it so far. Steep learning curve, as everything is, but I really am kind of learning the ropes and being able to cover all aspects of financial planning. I suppose it's just also a bit about me personally. One of the reasons I moved back from Australia was to spend some time with my family, so I like to spend a lot of time with them, and otherwise I can be found kind of hill walking or running. I like to be very active and outdoorsy. So just pass on to Sandra just to do a little bit of intro.
Hello there, Sandra Robertson, financial advisor as well. So I've been a financial advisor now for over 25 years, a long time. So a wealth of experience across all aspects of financial advice. More recently, specialising in looking at care costs. So that's a real crisis area, and financially as well as social care. Previously worked with doctors for a number of years, so I've quite an in-depth knowledge of medical profession and the NHS pension. I live in Edinburgh, I'm married, I have 2 daughters in their 20s who keep me entertained. So prior to lockdown, I worked down in the North Berwick office, so it was always a joy to come down to North Berwick. So I look forward to doing that again when things get back to normal.
Perfect, thanks Sandra. So without further ado, I thought, well, let's start off this presentation and give you some ideas as to what we want to talk about today. And the first thing that struck me when I was thinking about what to talk about today was, well, what does wealth mean to you? Because wealth can mean lots of different things to lots of different people. And someone once told me, your health is your wealth. And it's something that's really stuck with me, and it's something I think I live by day to day. So in preparation for this today, I spoke to some female friends and family members and asked them the same question. And I was really surprised with the response. There was lots of different responses, but often money and wealth was not always about money. I really believe when it came down to it, it was about confidence and being able to make informed decisions about your future. So that's really what Sandra and I want to be able to help you and other females out there do. For some reason, for some women, this will mean financial independence, which allows them the freedom to be able to make choices. For others, it's about the security for the future, knowing that they can maintain their standard of living for both themselves and their family. Obviously, with the gender pay gap reducing and more women focusing in on their careers, wealth may mean to some women about securing competitive salaries. Other ones could be about juggling being a mum and having a career.
Another one's about starting their own business. Whatever your situation is, and whatever is important to yourself, we want to empower women and empower them to take control of their finances. Where this often starts, and I believe, is it's about education. So what financial advisors and people like Sandra and myself want to increase the knowledge of women out there, whether this be in specifics to do with investing or just general financial affairs. Ultimately, we want to have stability, and this can be achieved when we have a realistic plan that is executed well and adapts to the life's changing circumstances. This comes on to the next thing that I wanted to talk about. On a daily basis, Sandra and I will talk to lots of different individuals in lots of different walks of life who all have differing needs and objectives. And I'm sure that covers the majority of you listening today. For those of you who've never spoken to a financial advisor, you're probably thinking it's going to be very formal in an office, and we're only going to be talking about facts and figures and financial affairs. You may well be surprised. What we want to do is we want to really understand you and understand what makes you tick. This is normally done over a series of different meetings, generally very informal, coming to your house, having a coffee. And what we do over these meetings is construct or create a specific life plan for yourself. This plan really involves getting to know you, your family, your next of kin, your loved ones, and really understand what's important to you. What we find is it generally revolves around four key themes, being family, career, lifestyle, and home, but that can be adapted and include anything you want it to. We will discuss things like your hopes, ambitions, and goals for the future, which is often something that you don't think a financial advisor will talk to you about. Once we've gathered all that information, we will then combine it with factual or financial information to create a comprehensive plan that can be worked towards in the future. I think also just worth mentioning that the document that we will put together, or the discussion that we put together, is evolving. So this can be altered in accordance with what's happening in your life at that time. This is something that we would review at meetings when we catch up regularly. And this makes sure that any recommendations or advice that we provide is very much aligned to your specific needs, and it's very bespoke to yourself. As financial advisors, Gilson Gray Financial Management offer a no obligation, free of charge meeting to discuss this with any individual. And this can be about a specific financial situation or your whole financial situation. This is something, if you think you'd benefit from, please let Sandra and I know, and at the end we'll give you our contact details and we can arrange that for you. As I briefly mentioned at the beginning of this presentation, we talked about the foundations of financial planning, and really the foundations and the basis of it is always protection. And you're probably thinking why, because people often think it's more so about investing or saving money or a pension. But what protection does is protection allows you to have security and peace of mind, so that you know that in the event of the worst happening, that your family would be able to maintain the same standard of and quality of life. This is often a topic that's really hard to discuss, and it's something that we often put off. But I would urge you all to review your current financial protection situation, and potentially speak to an advisor sooner rather than later about what can be done or where there may be gaps. Just to give you a bit of an insight, they believe to be about 1 billion Brits out there who are financially responsible for either younger or older family members. So this sandwich generation looks like it's going to continue to grow. And that's because couples are leaving it later to have children, and also the older generation are living longer. So this kind of dual financial responsibility makes it even more important to consider how loved ones would cope in the event that if you suffered an illness, or the worst case scenario that you even die. As a healthy working person, probably like myself, with a good income, you feel reasonably confident that you'll be able to provide for your family. but your finances could be more precarious than you think. So all I'm saying is probably just take a bit of a stop, have a look at your situation. And that's often why financial advisors like Sandra and I will emphasize not only growing your wealth that you've already potentially got, but also protecting your family with insurance. Again, I'm not going to spend the time today talking through the different options available because there's such a wide range of insurances and protections available out there to help give yourself or your family cover that gives you peace of mind. And that again comes back to it being very specific and aligned to you and your specific needs. So again, both Sandra and I can offer advice and protection. So if that is something that you'd like us to review, please let us know. I'm going to pass on to Sandra now, who is going to talk about women's major financial milestones within their life.
Okay. So Becca talked earlier there about a life plan. So throughout all women's lives, there will be different circumstances that can all impact on your individual financial plans. And a financial plan really does need to be a working document because it will vary with different financial objectives and emotional drivers throughout a woman's life. You can see from the slide, we often use a timeline. So depending on your age, your financial circumstances, at different stages in your life, your financial goals and responsibilities will vary for each and every one of us. So your financial plan needs to be very much individual to you. We're all very much more aware of our own physical and mental well-being, and financial well-being is equally as important. There are many physical, emotional, and social demands that are placed on women throughout their lifetime, demands that quite often a man may not face. So these can come with financial implications. So, for example, if you decide to have a family and you stop work or you reduce your hours to look after your family. I've got a number of friends now who've reduced their hours to look after elderly parents. It might only be for a few months, it could be for a period of years, but that can have financial consequences in the longer term. So if we look at the sort of timeline, the time frame, for most of us, when you're in your 20s, it's when you've just started working, you might have just started your career. Your priority may well be financially just to enjoy your salary and spend the money. But it's likely the first sort of financial commitment you would consider might be to save towards buying a property. And it's not easy the way house prices are, particularly in and around Edinburgh. So is that a short-term plan that you have? Can you realistically afford to do that in a short-term period? How much can you afford to save? So if it is short-term, you might just look at a bank account. Fairly simple, unsophisticated. However, if your plan needs to be a bit longer term, it's a longer term aim. By longer term, I would be talking sort of 5 years or more. And the reason for that is that then brings in the option of, well, could you have an investment-based savings plan? And if you're looking at investment, you really need to think 5 years or more. Investment can offer you a much better return, particularly at the moment when interest rates on a bank account, anyone that's got a savings account in the bank, you'll know that interest rates really are poor. We know from research that women are very good at saving, but they often shy away from investing. But why is that? With advice and guidance, this will empower you to have the confidence to invest and reap the benefits of an investment over the longer term. So my job really as an advisor is to clarify, explain and simplify what your options are and put you in a more informed position. When you reach your 30s, your career's progressing, you may be earning more, financially more stable. You might be in a relationship by that stage. So do you choose to hold your finances jointly? Or do you want to keep your financial independence? Nobody starts a relationship with the intention to split up from your partner or plan to get divorced. But if that was to happen and you were to come out of a relationship and you were on your own, have you considered how would you be placed financially? Financial advice I got from my mum was always have your own wee savings book. So maybe not the most sophisticated advice. But in your 30s and 40s, if you choose to have a family, That then impacts on your income position. You might reduce your working hours, you might go part-time, you might take a career break and have time off work altogether. So if you have stopped earning, you'll also have stopped paying into a pension for your retirement. So in your 30s and 40s, this is a stage in life when most of us will have a mortgage, which is the biggest financial commitment most of us have. You may have young dependent children. So this is the time in your life when you're more financially vulnerable. So as Becca was talking earlier there, this is when you really need to protect your financial situation. You've got the highest level of commitments and financial dependency. So there's always different considerations, adapting the focus of your financial plan and the type of conversation I would be having with you to reflect the change in your circumstances. So if you have joint finances, it's also really important to know, how would you be placed if you or your partner became ill, you're unable to work? Do you rely on one main income to support the family lifestyle and maintain routine household bills? If you're not working, but you've chosen to stay at home and run the home, look after the children, you're not contributing income to your home, but there is still an economic value. If you suffered a serious illness, or God forbid you died prematurely, how much would it cost to replace you? To replace you as a childminder, as a nanny, or someone to come into the home and cook and clean for the family? Is it a sort of insurance that you have for this type of event? Does your employer provide life insurance or private medical insurance or critical illness cover? Does it actually concern you? Ultimately, any financial plan is about the dialogue you and I have as my client to prioritize what matters most at that stage in your life and what concerns you, if anything, and ultimately, what can you afford to do about it? So depending on your overall financial position and your budget, when you have children, often your own personal financial goals tend to take a back seat. But that's why it's so important to have an ongoing relationship with your financial advisor. My job's really to get to know you, to find out what's your relationship with money, how do you manage your money, what are your goals, and to really steer you as much as I can. The real value of having that ongoing relationship with your advisor is to help women like you and I to make better financial decisions and avoid pitfalls at certain stages in life. So having an ongoing review of your individual position is absolutely vital, looking at your family situation, short-term, long-term. So as we move on, we look at when you reach your 50s, women who may have been working part-time might decide to return to work full-time. They might retrain or begin a new role altogether. So again, it makes sense to review your financial priorities. Your children may be less financially dependent at this stage. So you might not need to pay for certain insurances that you put in place earlier in your family life. But with busy lives that we all have, it's quite easy actually to have paid for insurances, kind of forgotten what did you put it in place for, why did you set it up, and you just keep paying it anyway. You maybe don't actually need it anymore. So you can cancel things and review. So in your 50s, it's possible you may have more disposable income. So how do you want to use that income? It's not too late to focus your resources. Perhaps, for example, looking at retirement, because you're going to have a gap because you took time out. I'll be talking more specifically in a bit more detail about retirement and pensions at our next webinar on the 26th of January. And I know pensions are not exactly a sexy subject, but if you've had time out of the workplace to raise a family, or you've reduced your income for any reason, as a result, you will have reduced what you've paid to a pension. So you need to think about, how is that going to impact on what you want for retirement? How are you placed financially for that next chapter as you work towards stopping work? And a pension is just a tax-efficient savings plan. It's designed to provide you with an income when you reach retirement. Women live longer than men. Therefore, it makes absolute sense that your pension is big enough to last right throughout your lifetime. So you can see that throughout a woman's life, there are different priorities for each and every one of us, depending on our individual circumstances. So I'd really encourage you to take the time, sit down with myself or Becca and chat through what is important for you. You may already have all your finances in order, and that's fantastic. But I would still encourage you, have a plan, and we can work together, review and adapt as time goes by. And as Becca mentioned, there's no cost involved in having an initial chat with either of us. We're here to help you, ladies, so why not take up the opportunity? So I'm now going to pass you back to Becca, and she's going to run over some of the specific questions that we've received already.
Perfect. Thanks, Sandra. That's really, really helpful, really important information there. So, yep, as Sandra mentioned, we've got a few questions here, and we're just going to see how we go with time about how many of these questions that we cover. And this is just to give you a bit of a flavour of some of the questions that have come in that could be on your mind, that hopefully will, you might fit into your personal situation. So the first question that got through was, finance and money is a daunting subject. Where is the best place for me to start? A really common question that comes up a lot. A lot of women feel overwhelmed and daunted at the thought of where they even start. And what we know from experience is often it's the male in the household that deals with these financial situations. So in short, I always say start somewhere. The fact that you're even at this webinar, listening to this, potentially thinking about talking to Sandra and I, you're already on the right route. So you've already done the first step in a way. I would initially recommend that you probably sit down and commit a bit of time to it, and probably just do a really basic budgeting exercise, having a look at your income versus your expenditure. Then kind of tying into what Sandra had said is really think about you personally, where your priorities are. What do you want for the future? What are your goals? And then match that up with any either surplus that you may have available. Again, I would encourage you to engage with someone, whether it be a financial advisor. Obviously, a professional would be fantastic, but it could just be a friend, could be a family member. Talk it through. When you voice these things, it becomes real. And I think set yourself some targets. So if you set a target and you hold yourself accountable to it, you're far more likely to achieve it. So hopefully that just helps give you a bit of a flavour as to where I would probably recommend that you start when you want to talk about finances and money. Sandra, I'll pass on to you for the next one.
Okay, so the next question is, I don't have a large amount of surplus income. Is there a minimum that needs to be invested? With certain investment contracts, yes, there is often a minimum, usually about £5,000. But I would actually say to you, before you think about investing, what I would be looking to do is, first of all, to make sure you have cash in the bank. So before you look at tucking money away, so any investment generally would be 5 years or more. You're tucking it away. It's not locked away. It doesn't mean you cannot access it, but ideally you want to leave it alone so that it can accumulate and grow. So before you put that money aside, have you kept enough in the bank just in case? So we often refer to it as an emergency fund. So it's just a contingency. Something happens out of the blue, there's money there. Also, I would suggest you think about if you get any bigger expenses coming up. Are you planning a big holiday? Have you got home improvements, replacing your car, something that costs more than just your average monthly outgoings? That is money that if it's going to happen in the next 2-3 years, you've got that larger expense, then you need to put that money in the bank as well. So we know the bank is not rewarding savings at the moment, but the key thing is you need to keep that money accessible because you've got a plan for it. Then from what you've got left, that's the money that you could comfortably say, I can afford to tuck this away and get it to work for me over the longer term. So sort of 5 to 10 years. So often people get put off by the word wealth, thinking you need to have hundreds of thousands of pounds. Not at all. It's about whether investment is actually appropriate for you. And we would talk through to make sure you've got the correct sort of plan in place.
Perfect. Question 3 was, I often hear friends talking about ISAs. What are they and why are they beneficial? So for people who don't know, an ISA is just an acronym for individual saving account. Really, it's quite basic. Ultimately, the main difference between an ISA and a traditional just savings account in the bank is that it offers tax benefits as the money grows, and then that money can be withdrawn tax-free. So effectively, you can get more for your money. So the main benefit of an ISA is the tax benefits. Another benefit, I suppose, is its flexibility in comparison to some other investment vehicles that we may have, that you can access that money at any time. There are 2 main types of ISAs. I think it's probably just worth highlighting, is because people are not always aware of this. People often say to me, I've got an ISA, and 9 times out of 10, that's a cash ISA. So a cash ISA is a tax-free savings account normally attached to a bank. You pay no tax on that interest as you earn. But obviously, due to low interest rates that Sandra had mentioned earlier, you're really not making a huge amount of growth on cash ISAs at the moment. What the other type of ISA available is a stocks and shares ISA. So this is effectively a wrapper that sits around an investment portfolio. A wrapper means, again, that you have no tax to pay on any dividends, growth, interest or income that generates from that investment. And this is, I suppose, probably often a common starting point for any new investor and anyone who is looking to get that money to work harder for them, like Sandra was mentioning there, for kind of a period of 5 years or more. So hopefully that just gives you a little bit of an insight into what an ISA is and what the benefits are.
I mean, the only thing I would add in there is one of my daughters recently bought a first property. So she had used a lifetime ISA. Yep. And with that, you get 25% tax relief. It has to be used for a first time purchase. Otherwise, you're back to just the same sort of nominal interest, but a 25% addition can make a massive difference if you're trying to get a deposit together. So just
yeah, that's a really relevant point. Yep, thanks for that, Sandra.
Okay. So moving on to the next one, can I invest independently without using a financial advisor? Well, yes, you can. It's quite easy to go online. There's various options. You can Google search it. There's various providers. You can select funds, or you can use what we call a tracker fund, where it just tracks various indices. The main thing I would say is, if you've never invested before, there is no advice, there's no assessment of your circumstances, there's nobody looking to see, is this actually appropriate for you? So there is an element of risk that you're choosing how you invest. You know, is it an appropriate level of risk that you're taking? Are you familiar with the terminology and the information that's being provided online? It will be cheaper, however, because the cost of setting it up, when you've got no advice, no expertise, no guidance, no ongoing service at all, will be cheaper than an advice-based investment. So it's not really just about setting it up, it's also the fact that this is a long-term plan. So you may select funds or select companies you want to invest in because you're familiar with them, or you think they've done well, or their performance rating has been good. But 3 years from now, that fund manager may have retired, may have moved on. So perhaps the performance levels or the returns from it have changed. So if you want that level of input and level of involvement, then it might be appropriate for you. But it's just being mindful of, you're taking a risk with your money if you're not too sure what you're doing.
Yep, great. I think we've probably just got enough time to fit in the last kind of couple of questions, Sandra. We keep them brief. So the next one was, I think I have some protection with my job, but how can I find out what I have and whether this suits mine and my family's needs? Comes back to what I had talked about a little bit earlier. I would definitely recommend that you always, before thinking about taking out any additional protection, that you look at what's provided already or what you already have. Sometimes it can be a bit hidden, and it's not something that, especially if you've been in a job for a long period of time, that you might not necessarily be aware of if you never utilized it. So I would definitely speak to your employer, and if it's a larger company, they've got an HR department, finance department, that's definitely something that you could speak to them about, whether there's any additional benefits. And the kind of things that you're looking to be asking about is things such as death in service, which is a very common additional benefit that's provided by an employer. Sometimes critical illness cover, private medical insurance, and at times income protection as well. So they all fall under that banner of protection. And the reason that it's so important that we find out about what you have already in place is before you come to a financial advisor or you start looking around in the market for additional protection, we would want to make sure that there's not duplicate cover in place. We want to make sure that from a budgeting perspective, you're only paying for what you would ever have to use. So it's really making sure that you know what you've got already. And then I suppose it's looking at your own personal situation, and each family's needs are different depending on potentially your age of your dependents, of your children, whether you have a mortgage, etc. And then working out where the gaps are. So that's again something that an advisor can do and sit down and just highlight the gaps that you may want to consider for protection. And again, we would look at your budget, what you're willing to spend each month, and put that kind of all those pieces of the puzzle together. So hopefully that helps, just being able to determine where to start in regards to understanding the protection that you may already have in place. Is there anything else there, Sandra, that you think that would be beneficial to mention?
I suppose the key thing is just being mindful that often if you do have employee benefits through your employer, start with what you've already got to work out what sort of gap do you have in terms of what you're actually looking to have, because sometimes we do forget about benefits provided through an employer. Mm-hmm. It can be really worthwhile because they don't cost anything a lot of the time.
Yeah, and I suppose just on the back of that it is being aware that if you do cease that employment, you're no longer attached to that company, that cover then may no longer then be in place. So at that juncture, whether there's new employment or you're changing careers for any sort, is to consider the review of the protection at that case would be a really relevant point.
Mm-hmm. Yeah.
And just the last question, Sandra, if you're happy to go ahead with that one.
Yep, so the last one is, if I inherit money in the future, what would be the best way to invest this? And if it's possible to pass it directly on to my children so it doesn't become an inheritance tax issue for me. So there's a few elements to that question. There's lots of ways you can invest money, and I suppose ultimately it comes down to what age and stage in life are you at when you receive the money. You might want it for your own benefit, or you might think, you know, with the best will in the world, we're not going to spend this during our lifetime. So depending on when you get the money. So you may choose you want to pass it on to a future generation. If you're comfortable, you can essentially make an outright gift of cash and just pass on capital that way. As I mentioned earlier, having two daughters, I know if I was to gift them a lump sum of money, they would spend it in the weekend. So perhaps not. None of us know how our children will turn out. So often we can use a trust. So what that does is enable you to retain the control. So the investment can be made in the trust. You have authority with other trustees. And what that means is you can control what happens to the money. So the benefit will be passed to whoever you want to benefit, so your children or any number of people, but you can control when that would happen. If it's in a trust, it's then removed from your estate. So from an inheritance tax point of view, it's no longer assessed once it's past 7 years. So that's the sort of gift rule if you've got an inheritance tax problem already. But there's lots of different ways to mitigate inheritance tax. When you can invest and still take an income from that investment, so you're still getting some benefit for yourself. It really comes down to what do you need from it, whether you're happy to give it away entirely, whether you want to give it away but with control using a trust, or whether you give away part of it, remove it from your estate, but still receive an income if that's what you're needing at that stage in your life. So it's all about the giving up the complete ownership, or if it's just the control you want to keep. So it can be quite a complex area, but something absolutely we can help you with.
Perfect. And I think that could be something that, you know, a lot of us come across is the, what do we do when we inherit money? And as I say, it's an individual thing, and it's something that definitely we can sit down and talk you through about, you know, how can we mitigate any potential inheritance tax. So I suppose that's everything that Sandra and I wanted to cover today. It was just really, just going to go into my last slide if I can get it on moving, if my computer wants to work for me today. Sorry about that. Just really a big thank you from Sandra and I for attending, for listening. We hope that you found it informative, that it was relevant, and we're just really hoping to be able to capture as many people as possible, and being able to tap into something that hopefully was relevant for yourself. As we mentioned at the beginning, please take a note of either our phone numbers or our email addresses and be in touch. We're happy to have a, you know, as I say, the free of charge, no obligation meeting. And then there is a discount for these Soldian ladies for any initial advice if you were to progress to do an investment with us, which again, we can talk to you about in an individual basis. So yeah, just a big thank you from us for listening. And as Sandra mentioned, our follow-up webinar is going to be held on the 26th of Jan, and we're going to be focusing mainly in and around pensions, but there will be some other topics that are going to come up in that one. So we'll look forward to having you attend that one as well. Thanks very much.
Thank you.